Okay. Morning, everybody. My name is Arun. I'm the founder and CEO of Strides, and I have the pleasure of introducing Abhay. For I guess all of you know him, so I'll let him do his part of the talking. Thank you for coming this morning at short notice. We obviously had a important announcement that we made yesterday. We would like to spend the next 15-20 minutes to take you through the transaction, its rationale. And along with me, I have other colleagues, Vikesh, who handles investor relations, Mohan Kumar, our CEO of our pharma division, Mr. Badri, our CFO, and I'm sure we can all chip in to answer some of your questions that you may have. So before I start, obviously, this is what I believe truly the first consolidation between two like-minded companies and families, if I may say. Not taking away anything from what Sun Pharma did with Ranbaxy, but I still would assume that's a Japanese company. So we believe that in this new phase of consolidation, unless Indian companies come together, it's going to be extremely difficult for us to operate in the regulated environment and also to accelerate growth. So the slogan today is the combination of Strides and Sashun, which is basically done to accelerate strategy and growth, and that is the reason why we are here today. And obviously, as we slip through the few slides that we have, I'm sure you'll all appreciate the compelling reasons of conducting this transaction. But before I start the page turns on the presentation, I'll request Abhay to say a few words, and then we can get started.
Good morning, and thank you very much for coming over in the morning. Sashun and Strides have been looking at what are the complementary strengths each one of us have. And we've been working on it, and we have seen that Sashun has been investing a lot of capital in the last 3 years, taking a course correction and moving towards building up a strong pipeline of formulations. Our formulations, which have filed for US, are on a different strengths of extended release and delayed release. So we saw a synergy where institutional sales of Strides, the strength of formulations and API of Sashun, and CRAMS business in UK. We thought that this will be a right platform where we can merge together and derive these synergy benefits. So going forward, we look for a great future ahead. Thank you, Arunji.
Thank you. So, Vikesh, would you just, in terms of the transaction overview, as you know, we announced this transaction yesterday. The boards of the two companies met, and the scheme of the arrangement was approved for the merger of the two companies. This combination of Sashun and Strides will create a vertically integrated, I may just request the mobiles to be switched off, if you don't mind, or in silent mode. The combination will create a fully integrated pharmaceutical company of scale, presence in major geographies, and also predominantly the regulated finished dosage formulations. Like, just taking off from where Abhay left, all the formulation business that they have been building in the last 3 years is focused on the US market. So that gives us a nice bump for the combine. Also, we are one of the few Indian mid-sized companies which did not have integration to APIs. I would say that while we were very focused on building Agila, that was not so important because API concentration in injectables was very limited. That's obviously changing with our focus on dosage forms. And also it gives us the full integration, therefore, of the API business, but also an important CRAMS business, which during our conversations we've had with Abhay and his leadership team, I was actually very pleasantly surprised with the complete turnaround of the CRAMS business, which they operate out of the UK. And we think with our global connectivity, the two companies can combinedly grow this business in the near future. In terms of revenues, the combination with revenues over 2,500 crores is amongst the top 15 Indian pharmaceutical companies. And obviously, we believe the scale will give us the necessary scope and the visibility to drive this business. Promoter groups have agreed contractually to vote for this transaction. And then both promoter groups will be classified as promoters of this new entity. In terms of the terms of the transaction, the surviving entity is Strides, and the scheme is as per the Companies Act of 2013, and it's a 100% share swap. So there will be 5 equity shares of Strides for every 16 equity shares of Sashun. In effect, Sashun gets about 26.01% of the new fully diluted new capital. There are certain warrants that are available that needs to be converted at Sashun, which we will talk about in a bit. And the ownership split, like I said, is 74 and 26. We expect closing to be June 2015, and there are certain closing conditions. There is a majority public shareholder approval from both Strides and Sashun. Regulatory approvals, FIBP, as we have a strong FI holding, RBI approvals, creditor approvals, and the CCI approval. But before I just go further, let me also say, for the benefit of people who are not able to ask us questions today, because we have a listen-only mode telephone line open and a webcast which will be on our websites for the next many days. Those of you who would not be able to ask us questions, you're very free to connect with us, and we'll set up separate calls so that we can answer some of those questions. Thank you, Vikesh. So if you look at the overview of Sashun, the business has been flat in the last 3 years, not except it started picking up in the last financial year. It predominantly supplies and manufactures and sells APIs. Dosage forms is a new business segment Sashun has invested in, and then the CRAMS services is operated out of their UK facility. Consolidated revenues for Sashun were 1,300 crores with an EBITDA of 164 crores. This is the last 12 months, which was the basis of this transaction. And a large chunk of Sashun's business is in APIs at 59%. Sashun, as probably you are aware, is one of the largest manufacturers of ibuprofen in the world, and also key suppliers of ranitidine and gabapentin. And it also has very marquee customers, including all the innovators who use their products. They have a strong portfolio of DMFs, and they have 2 FDA-approved facilities in Tamil Nadu. 16% of the sales, many of you probably do not know this, but 16% of the sales of Sashun's comes from a dedicated US formulations business. Historically, this business has been partnered. Probably that's why it doesn't appear as a Sashun livery or a label. And it's currently developing a lot of products from a state-of-the-art R&D center in Chennai, and it has got a very significant FDA-approved facility in terms of capacity. In fact, it is almost double Strides' FDA-approved facility for capacity, and that was an immediate plus for us to make this transaction look even more compelling. What was even more exciting is that when we did our diligence around our portfolio, out of the 120 odd products that are in active R&D, there was only 1 product overlap, which means it was very complementary to skills that we were getting into the stable, which we had no capabilities, and Sashun was riding a completely different domain capability of Strides. So it actually worked as a win-win. They have a product portfolio of 30 products in the extended release domain. And what is important is this is not an intent. If I'm not mistaken, I think about 6 products have already been filed with the FDA. So they've already completed clinical studies, bioequivalent studies, and it looks very promising in terms of product selection. CRAMS, there's a checkered history with the CRAMS business. with dependence on one customer, but that's changed. And during our conversations, we were pleasantly surprised that Sachin's UK facility is currently servicing Big Pharma with 7 products in phase 3. That's a very, very significant range of product offering. And Mike.
Yeah.
Okay? Right, great, thanks. Biotech at Sachin is a very small business. It caters only to the domestic market. And it's something which we will talk as we continue this conversation. So the strategic rationale are very compelling. Obviously, it creates a vertically integrated pharmaceutical company of scale and in strong presence in the front-ended regulated markets in finished dosage forms. Strides already has a very important market in emerging markets, both in Africa and now in India. In fact, in Africa, we are now the fastest growing company amongst all Indian companies, and we expect to be the #1 Indian operator in that market by end of next financial year. And that's a predominantly branded market, so obviously that also adds value. With our recent acquisition of the branded business of Bafna for India, the product portfolio of Sachin will complement our offerings for the Indian market, and I think that's another plus. Most importantly, as other slides here will showcase, in the institutional business, out of the 6 approved players, we are the only institutional player without API integration. So as a consequence, the billion-dollar opportunity that is available, we are a very small player. In fact, our revenues are less than $50 million. Obviously, we are very creative with our product selection, so it's a profitable space. But given all the regulatory frameworks, we are finding this business becoming more and more interesting for all players. So everybody is now not chasing pricing. They're chasing value and profits. And I think the integration with Sachin will add significant upsides. What's very interesting is that Sachin's facilities are already WHO and FDA approved, and they've already commenced filings for APIs that fit into our institutional business strategy. So that could be an interesting bit, and I think that will take the velocity of our institutional business to great size. We would like to believe that we are amongst the top 15 companies. This gives us both scale. We believe our coverage will improve. We believe the momentum of growth would be significant, and obviously this brings in a lot of other advantages of size. There are synergies that I'll talk about in an upcoming slide. So based on the last 12 months LTM, we had sales of close to 2,500 crores on a combined, with 378 crores of EBITDA. 160 odd crores comes from Sachin, and 210 odd crores comes from Strides. But what this does is that if you look at the Strides business, we are in emerging markets, institutional business, and regulated markets. Whereas Sachin has got finished dosage forms, APIs, and CRAMS. And combinedly, we will now be fully integrated. And the other good point is that Sachin was not invested in injectables. We have a non-compete. They had no product portfolio around that, so that also had no challenges for us. The emerging markets FDF business will have CRAMS, institutional business. Regulated markets is now 26% of our combined revenue, and APIs is 31%. The challenge for Abhay and me is going to be, it's not about saying that we want to get away from APIs. APIs is going to be a very important part of our business as we can speak more about the strategy. But in terms of absolute numbers, we want to shift the focus from API transactional sales to formulation sales. And that's what we think we would be very good combining and delivering that. Geographically, this also spreads our business quite significantly, and it gives us a nice mix of different geographies and different revenue streams. You're probably aware that from 1st of January 2014, Strides commenced its front-ending sales in the US. Although a lot of Sachin products are partnered, we strongly believe that we can work with those partners to either get that portfolio back or work differently where we would be able to increase our marketing reach and improve our profitability. We are already in discussions. In Africa, we have a very strong front-ended business. We have now over 300, close to 300 medical reps, and we think we can take that to about 1,000 in the next 3 years. The Sashun portfolio nicely adds up to those demands of scale. We have an important business in the UK that could do well with these new products, and of course India is a small but getting important market. This for me is the most compelling reason which is product for this transaction, which is product pipeline. What it does is that, and I'm sure some of those analysts who cover us will be pleasantly surprised because we never give breakups of our products. I can see Karthik already smiling. But we thought this was compelling for everybody to understand that we now provide a very broad spectrum of offerings. So we have soft gelatin capsules, already a total of 8 products, extended release, and I must say every single extended release comes from the Sashun stable. So not only do they have the deep domain on that, they have already got success, but I think this will accelerate our US operations very significantly. Strides recently got its first creams and ointments, and we were very happy to note that Sashun was developing certain creams and ointments, so that nicely adds up to a combined capability. We have 6 suspensions, OTC through ibuprofen, and the OTC combinations, Sashun was already very strong. They also have the RX ibuprofen, so we have a couple of products in Strides, and that's a nice 13-product OTC range. We have one 505(b)(2), which again comes from the Sashun stable. The first FTF is a Strides filing, which has already commenced. We don't discuss product specifics. And there are other products, and those of you who've been following Strides will realize that we've been focusing on legacy products, small molecules, where there's lesser competition, but few people operating in those markets because of either because of API availability or technology issues, and we are filling that gap. Our recent approval of methoxycillin is a classic example where the product was a $13 million product with 200,000 units, just 200,000 capsules of for $13 million. So we are working now we can work very closely to leverage Sashun's API capabilities to increase that niche and profitable domain. So this gives us a total of 160 products. And after Agila, where we had an average filing of around 40 products per year, with some years crossing 50, we had a vacuum because, to be honest, our R&D was very focused on injectables. And this transaction with Sashun completely changes that for us, and our filing momentum has increased. We've already filed as a combined about 7 odd products, so including what has to be filed, we are getting to close to about 23 to 25 filings, which is very good from a combination standpoint. PEPFAR is the US government funding, which all products come from Strides. There are 18 products, 16 of them are approved. And obviously now with the integration of the API and fast tracking of source changes on those products, I'm extremely confident that that business will ramp up very significantly and very soon. So like I said, in the institutional business, we are a fringe player. If you look at the US FDA approved players, as some of you know, Mylan is the biggest player in the space, followed by Aurobindo, and then we have Hetero and Cipla. And we were the only company which didn't have API integration. This fixes that. Aspen, of course, is a very South Africa-focused company with voluntary licenses. It's effectively a monopoly for them. But I think this gives us a nice capability, and I'm actually also very pleased to report that we've already received very encouraging news from the buying agencies saying that they're very pleased with what we've done because the agencies are finding certain challenges on supplies. And I think they're looking at increasing that offerings, and that what Strides can do could be very, very interesting. Of course, with the recent Gilead licensing in, and also additional opportunities will come that we can probably bring into the Sashun manufacturing capabilities. There have been Sashun has been very active with their DMFs. They have about 43 DMFs commercialized, 23 under development. Our challenge would be the last bullet on this, is to leverage their APIs into finished dosage forms, which is what we think we will be very successful doing. And how quickly can we use some of the commercialized DMFs into our own formulation development. And that's a key focus for the combination. In terms of people, we are going to be a 4,000 people company. What is more interesting is that we now have capabilities in biotechnology, in process chemistry, formulation development, with 400 scientists working across the spectrum of R&D and development. We believe that we will now get into the fast track of what I like to use, version 2 of Strides. I mean, I'm borrowing it from Abhishek, but truly a version 2 of Strides in terms of what we are trying to achieve. Thank you, Vikesh. So this basically talks about the top 15 companies, and we guess we will be very much in that range. Obviously, I strongly believe that we have a significantly faster growth rate. I'm really not interested in the pecking order. I'm definitely interested in how much more value we can create, and I think this can, this transaction will deliver that in the near term. So there are revenue, cost, and other potential areas of synergies. Obviously, the revenue synergies is that the merged entity can cross-sell. Sashun has got a wide spectrum of customers, so do we have, and we can cross-sell to each other's customers. There are cost synergies. There are significant cost synergies. We do not need, two different shared services. We can rationalize and improve on various of our cost structures, and our benefits, where we believe this transaction is accretive or neutral in this year one, or very marginally accretive after transaction cost, does not include any cost of synergies. So added for cost of synergies, we think this could be a very, very significant uptake in terms of value creation for both our companies. Okay, so in terms of the post-merger shareholding structure, promoters, as the Sashun promoters, are going to be classified as promoters, and that was the only way I would have done this deal. We'll own 34% of the company. 42% will be owned by institutional investors and other funds. As you probably are aware, 48% of Strides equity is currently FI owned, or very close to 50%. And 23.7% are other shareholders. It's very important that I disclose some group cross-holdings, just to follow my continued theme of compliance. To be very candid, I am a promoter interested in another company called Sequent, which makes predominantly veterinary pharmaceuticals. And to be very candid, our conversations with Sashun was actually started off with Sequent. We approached Sashun for capacities, as Sequent had limited capacities and it was ramping up its business. And Sashun had a new facility in Vizag which was potentially available, but they were not willing to sell it, so we became partners and we created a veterinary business together. After that, Sequent took a strategic and more a financial investment with no board seats or no information rights in Sashun. At that time, what I thought was about 39% premium over a 26-week average at 110 rupees, which was a 22% premium on the day of the issue, of the 2-week average. We already committed to invest 120 crores from Sequent. I want to reconfirm that this investment will stay. This will stay, and this will stay as a pure investment for Sequent and the family office. So this has got no other intentions here. And then the promoter groups, as some of you know, are related. And the family office already owns 1.3% of Sashun. So all these numbers of 32%, 34% assumes all these ownerships too. Couple of key next steps: shareholder approvals for both Sashun and Strides. approval from SEBI and the stock exchanges, court approval for the scheme, FIBP approval, the RBI approval, and the CCI approval. The closing is anticipated June 2015. We worked with advisors for determination of fair exchange ratio, which we appointed SR Bartley Boy, which is Ernst & Young, and Price Waterhouse as for determining the exchange rate. Fairness opinion was provided by Jeffries, and fairness for Strides, and for Sashun was by IDFC Securities, and legal advisors were Amar Chand and DSK Legal. Thank you, and that's all I have on the presentation. But before I open the house for questions, obviously we will ask Abhay to say what he needs to say additionally. If I may just take 2 more minutes and explain another transaction Strides announced, so that we don't have to get back to the presentations. Yesterday we also announced a strategic investment from GMS Holdings in Stelis, which is our 100% owned biotech arm. We've been telling everybody that our biotechnology business is focused on bio-betters. That is, we are not in the monoclonal antibodies. We are not at the $60–100 million per product range of development. Our focus is on improving affordability, reducing cost of product, and therefore increasing our emerging market play. Having said that, our clinical studies and our filings meet global standards. So whenever we want to switch, we are ready for those markets, and our state-of-art plant will finally get going within the next quarter in Malaysia. The reason why we're in Malaysia is obviously because we have had significant tax benefits and a lot of R&D grants and refunds on our clinical trials. Nonetheless, we had indicated earlier that we would potentially invest between $100 and $125 million into the biotech arm, and this investment from GMS kind of moderates that a little bit. We probably wanted an investor who would not only bring in the money, but also would bring in the strategic rationale and also the compelling reasons to expand in the emerging markets. So GMS Holdings is a significant multi-billion-dollar group, and they are in various businesses like telecom, oil fields, but predominantly pharmaceuticals. So after Hikma, in the MENA region, they are the second largest pharmaceutical group called MS Pharma, and they own significant controlling stakes in companies in Algeria, in Saudi Arabia, in Iraq, Jordan, Morocco, and Egypt. This is a region where no Indian companies are actually successful. So not only will this transaction, which GMS is investing $21.9 million for a 25% stake, not only will it bring in a lot of value, but it will also help the combined Sashun Strides combined to enter those markets as we are discussing with them on other opportunities. So that's a very small transaction, but strategically and structurally very important for Strides. One is it kind of de-risked it. Second is that for whatever money we invested $17 million so far. We were able to get a 50% premium. It's symbolic, but it just says that we're doing all the right things. We will invest another $40 million from Strides, and they will invest the $21.9 million minus the 8.5 which they'll place now. So that will give us Strides' total investment will be $57 million from the earlier expected amount to be about $75 million before debt. So that's a small equity saving, but more than the equity saving, I think it's also de-risks the model, because we like to have a partner share the upsides and downsides on this business, which is still emerging for us. So that's about it on the. Just go to the next slide. Yeah. So just. Yeah. Thank you, and Abhay, before we open the house, I'm sure you may want to add a few things. Sorry.
It was just the combination of two strong companies in their fields was the driving factor behind the merger. And size also matters, so we felt that the size will attract a lot of talent, a lot of markets, new markets will open up. And Sashun has taken that corrective course last 3 years, and we see that those uh, product portfolios which we have built over the years will get the necessary approvals in the years to come. So we see a huge strength, a combination of strength and a bright future for all the stakeholders. Thank you.
We need some questions.
So could you also cover the recent receipt of $150 million from Mylan so that the questions follow after that?
Okay, so so the 250 million contingent holdback is always up to 250 million from day one. So what it entailed is that if we had received an import alert of the warning letter in our Rajula facility, we would not have got any funds, any money. That was the deal. But the inspection was conducted in September and the deal concluded in December first week. So the post-inspection FDA commitments were provided by Strides Group and not by Mylan, right? Which entailed significant commitments to the FDA in terms of remediation. So that is, we would add more people, there are certain equipments that probably needed further upgrades, automation of microbiology and stuff like that. If those of you have read the 483s, you will see that that was a 483 which had no integrity issue, so we were sure that we'll not get an import alert. If we had an inkling of an import alert, we would have not guided a distribution. Okay, so it was all capability, and we committed to the FDA that we'll build those capabilities. Contractually, we also then agreed with Mylan, and you must also appreciate that in September when these events happened, we were already talking to Mylan, right? It was quite well known to everybody we were talking, and they had a chance to walk away from the deal, which they didn't. But we structured it in a manner where they are not out of pocket in the event of some eventualities. And one was an import alert. If there's an import alert, you don't get any money. And if for the commitments that we have made for our 483 responses, they would have interruptions of supplies on their existing products, not new products, because when you have a warning letter, you don't get new product approvals, then there would be a scaling down of that 250 million through a formula that obviously this is not the forum for that discussion. And that is why the holdback was up to 250. So if there was no supply interruptions, we would have got all of it, and if there was no import alert, we would have got all of it. So so how do we get to know about is that in the contract, because they were very focused on doing the remediation activities themselves, they had no obligation, or we had no opportunities to know if there was any supply disruption, except to know that we knew that products were going from the plant. But when on September, when they were supposed to pay us the 250 million, they sent us a big document which showed us all the disruptions. So we had two choices. One is we could dispute it, fight with them, go legal, but that's not the way this transaction even emerged with Mylan. One is that we have a fantastic relationship with this group, and there were many walkaway situations for Mylan. They didn't take any of them. So I flew down to Pittsburgh, and we sat with the leadership, and we found a solution, which is what you guys heard, which is the 150 million solution. Now, did I leave some on the table? The answer is maybe. I would have left some on the table, but I thought that was the best solution for the company, and we were very confident that we probably would not have got to the distribution levels that all of you hope to, but then in the end of the day, if we can commit $700 million of distribution, including tax, I think as entrepreneurs we have done enough for shareholder return. So we decided to do that, and another thing is that Mylan is a very large customer for the combine, right? And with our relationships, and good ones at very high levels, we only believe that will improve. So there were a lot of win-wins here for everybody. So that was the decision.
And what are the other pending or the escrow amounts?
So we have another technically 100 million regulatory escrow, but we have been guiding that we do not anticipate to get anything more than 40 because there are remediation costs. It's too early. You'll have to wait till H2 to see what is that final cost because we haven't got itemized bills and stuff like that. But we will need to discuss that. There is a 100 million tax escrow which is available to us after 4 years, of which a year is almost over.
And what's the plan for this $150 million now?
But we've already announced a plan that $20 million will go to the biotech, and after tax, we will recommend to the board of distribution.
The remaining full amount?
Yeah.
Okay.
Whatever we can. There are two things. One is we may have the money because we already have 800 crores of cash, but there's something called also you need to have reserves, is what my CFO tells me, to pay dividends. So if you declare 99% of your 89% of your free cash, then you don't have reserves. So there are challenges, but we are ensuring that we meet our commitments to the maximum possible.
And is this the right forum to ask your future plans on Sequent Scientific?
Not at all. This is not the forum at all. And I'm only a promoter. We can arrange a meeting with the CEO. He's a tough guy, but we can arrange it.
That's why I asked you.
Yeah, sure.
Thank you.
Yes.
How does the combined balance sheet of Strides and Sashun look like in terms of the debt and also the cash which eventually Strides will hold?
Okay. So Badri, just chip in if you need, if I'm going wrong. From what I know is that Sashun has 600 and change crores of working capital and long-term debt. Okay. Strides has zero debt, minus cash. So the debt equity is under 0.3 on the combined. Am I right, Badri? Under 0.3.
Including the cash which we are, this 150 million,
yeah.
Are you including that in this?
No. After assuming the ex-dividend cash, right? So we, just to let you know, just to clarify, we have committed to spend all the 150 million, 20 million for biotech, pay tax and give the rest to you if we can, provided the board approves. So you have to wait till the 7th. So we are assuming the board will approve. So the amount of the debt equity is actually 0.27, so it's without considering this 150.
Thanks.
Yep.
This 150 payout will not be shared with Sashun.
We would love to share it with them, but we can't because this will take 8 months. So
Yeah,
they have to be shareholders.
Yeah, just wanted to understand that. Okay, thank you.
Yeah, hi. Arun, just a couple of questions. First, I wanted to understand your strategic intent on the CRAMS business, because your current business model, vertical integration and all fits in. In Agila times also you had relationship in the CRAMS space with Pfizer, Sagent, etc. So how do you look at going back into the same business model?
Well, we made a lot of money doing that, so it's not something we'll dismiss. See, like I said, this is a transaction we brought on the table very quickly, right? Obviously, we've done very high level of diligence, very comfortable level of diligence to ensure that both sides are happy. Like I said, one of the more interesting themes out of these learnings were that Sashun has 7 phase 3 NCs, which is not a small amount of products at phase 3. So I won't be dismissive of the business. I think it's been course corrected. It's doing well. And in the next 2 to 3 months, we will complete all our integrations. But I can assure you, for quite some time, we'll be focusing on building parts of the business. There will be nothing that we're going to sell and distribute again for some more time. So just give us a little time to create that value again.
Yeah, second question was, you talk about synergies in the institutional business with Sashun's capabilities on the API front. But a large part of your institutional business is still in the anti-ARV segment. How long would it take to, get your backward integration in place and be competitive in the market?
Okay, so Sashun has already, so you need a couple of qualifications. You need to be US FDA approved and WHO approved. Sashun already is. Okay. 2, you need to make the APIs. One of the largest APIs is tenofovir. Sashun has already filed the tenofovir DMF almost a year ago and is very close to approval. And we have also used their material to accelerate the approvals. For the PEPFAR program, the review time is typically under a year. So it's very fast.
And similarly for the US business, you'll start filing now with backward integration with Shasun's capabilities?
Not immediately, I mean, it'll take us time, but the fact that Sashun is already filing products with their own APIs, it gives that, and it answers your question. We're already doing it in the combined.
Yeah. Thanks.
No, nothing. No injectables at all. Well, the position is open, Karthik. You can apply. Well, I think it's one is that the promoter group will have a board representation. If you know the Strides board representation, I'm the only promoter member in that board. Everybody else is an independent, mostly. So I don't think that's important. We haven't even discussed it. So I think both groups are very interested to get the right board, so that and there is a lot of depth and talent within the two boards. So I don't see any reason. These are not even items to be concerned.
And on the FI building, like there is actually a limit on FIs to increase the holding for Strides. In the combined entity, would you need any approval, or if it were to be merged tomorrow, actually what is the FI limit on that, and in terms of is that
So it's still 42%, right? It's 35%. And anything over 24% needs to go to FIPP.
Sir, couple of queries on Sashun pipeline. Basically, they have around 15 ANDAs filed and around 23 DMFs pending approval. So, what would be the key launches which we can expect over the next 2 to 3 years? They have around 6.
Sashun is part of the family. We don't discuss products. Sorry. This is one thing you won't get from us.
And sir, can you throw some light on what are the possible cost synergies which we can expect over the next 2 to 3 years from the merged entity?
Okay, so if you look at the synergy slide, the cost synergies are predominantly, we don't need too many corporate offices, global offices. We have offices in London, they have offices in Newcastle, so we can combine those costs, one. Shared services can be a single shared services. So there's a lot of SG&A. Typically about 20% of non-manufacturing costs are taken off as synergies in pharmaceutical business. We believe we can achieve that in the next 2 to 3 years.
Thank you, sir.
So these, looking at these, the filings and the pipeline which we have, can you just and the current business mix which we have, wherein we have API of about 30-35%, America is about 21%. So going, not talking about the timelines, but what is the broad picture next 3-4 years? What will this mix really look like? What do you really want to achieve? So we get a broad thought as to where the company is heading.
Well, I can tell you that even this combined will not make us the player in the US. It's not a market of focus for me, to be honest. We would like to set a target of being an extremely profitable North American player, and I'm happy if that can be $100 million of EBITDA with $125 million of sales. It's fine. But it's not about trying to be the top 10 companies in the US and all that game. I'm not in that game. What I think will be is that we'll be widely spread outside of Latin America, with emerging markets being a key area of focus, with India getting better traction, Africa being our biggest market as a branded player and a hugely profitable company. So we have in the last 3 years converted all our businesses, every single business, to be working capital negative, and except the pharma business, which will be by the end of March. And that's what we are focusing on, superior execution. So this is going to change. It's going to take us 2 to 3 years to get back, but I think we'll have a strong engine of cash flow, significant distribution capabilities, and creating businesses which create disruptive value. So that's the model. Now, where does that come from? I don't think it'll come from the US. Not because of the regulatory regime or the framework that's happening. I think if Indian companies can overcome that, you can't ignore the fact that we still supply 34% of the volume for 4% of the value. So we're going to be an important player. But I'm not a cost plus player. I've been predominantly a value or a value minus player at the least. So I think the whole combined shift from moving from a cost plus model to value plus will take me 2 to 3 years. And I think it'll create very important revenue streams, multiple green shoots. US will be one of them. It's not going to be the space. Now, even today, if you look at the Strides business, our European business is greater than US. I think we are one of the few European companies which operate in Europe and actually make profits.
So, which means that of these pipelines which you spoke about, which is soft gels, extended release, which we essentially we assume that some of them will be niche and there can be big opportunities. So, when you say US is not going to be a large part, which means there won't be any extraordinary opportunities in the pipeline which can accelerate your US significantly.
I would guess there would be a few products, but we will not be a profound player with 10 FTFs and 15 challenges, and yeah. So we will be there, but we will be a profitable player, not a large player. That's the theme.
And the other
Just
question,
to add on to that, the pipeline of APIs Sashun has been a major focus on the Japanese market. If you see some of the major generic launches which have happened in Japan have happened with Sashun's APIs. So we have a huge number of product pipeline already lined up where people are getting ready for the generics launch.
the R&D, the other question is on the R&D team, which you now as a combined entity will have. In terms of the plans itself, wherein you mentioned that moving from API to formulation, do you feel the team structure is the most optimal, or there, because Sashun more focus is, let's say, DMFs and those kind of filings, whereas now the thought process. So do you feel the structure is optimal, or there's some need change required in this R&D
There would
team?
be some changes. So basically the Chennai facility will have domain capabilities and leadership in extended release, and all the other domains will be at Strides in Bangalore. So there are a few extended release products that Strides is working on which will shift to Chennai, and certain products will move to Bangalore depending upon. So we want to create centers of excellence rather than yeah, that's basically it, centers of excellence.
Thanks.
More on the synergy, how much 1 plus 1 is more than 2. Because I do not know how much you sourced from Sashun prior to the deal.
Zero.
Perfect. And so
No,
would
sorry, correction, 1 crore.
So would the synergies more come with incremental business, because you would have some tie-ups for your existing with your existing vendors, and
Well,
vice
we don't
versa?
give guidance, you know us, so we can't give you an EBITDA number. The combined EBITDA looks a little constrained because of the stretched or lower margins of Sashun. So let me just try and break up Sashun's numbers so that you get a better perspective. Without telling you exact numbers, Sashun's formulation business makes more money than Strides, number one. The only problem is with the UK CRAMS business, which is at the cusp of turning around. And once that happens, you will see a very pleasant number coming out of the Sashun stable itself. The with synergies, we believe that, it's taken us about 3 to 4 years to get to that from 15% EBITDAs that we were operating 3 years ago. We are now at the 21 odd percent EBITDAs that we have been demonstrating. I think this combined can get to that level in the next 24 to 36 months.
And in terms of the growth, fair to assume Africa would be the biggest growth driver now ahead of US for the combined entity?
It has always been since the last 2 years. We have moved that business from under $10 million to significantly over $50 million in the last 3 years as a branded company.
Thank you.
Hi. This question on Sassoon UK part. As you mentioned that the cost center of the Sassoon is Sassoon UK mainly. So do you have some strategy on that side? Means how you are going to turn around that? What at this level do you have something in your mind?
You're asking Abhay?
Yeah, I can tell
I'm
that.
asking to you, Mr. Arun Kumar. Means you have acquired that business, so you
we have not
something.
acquired any business. First of all, let's say this is a merger, right? There's no acquisitions happening here.
That's fine.
So what I'm basically telling you is that we are excited about the Newcastle operations in its current avatar. Okay, we obviously need to give it a little time to see how many of these phase 3 products will be successful. Okay, at this time it is not stressing any balance sheet. It's not losing cash, but it's not making money, right? That hopefully would change very soon. And you need to give us a little time to allow us to integrate this business and then come back to you more towards when the merger is announced, to come with a more profound and potentially even a guidance on how the business would look going from there.
Or addition to that, do you have some strategy to hive off that business?
Right now, with the current portfolio of products we have, I don't think it is advisable or think also about any disinvestment in the UK. The number of new customers who have come for contract manufacturing there have been quite huge. This year itself we have added 14 new customers in UK. So the product pipeline is very strong. And the new, the 7, as he rightly said, the 7 products we have in the phase 3, the approvals, as soon as they come, they'll hit upon a long-term supply contracts. So we still are very bullish about UK operations.
Thank you.
Sir, could you clarify on the roles and responsibilities in the merged entity?
We haven't even thought about it. Great. Are there any other questions? And if not, then we can probably restrict to another 2 or 3 questions as I see. Any other questions?
Yeah, sir, just about the constitution of board now. So in merged entity, how the board is going to change now?
Like I said earlier, the designations, positions and the boards have still not yet been discussed. All we have agreed is that the promoters of Sassoon will be represented in the board. Typically, both companies have strong independent board members. We believe that will continue. So we do not know how many of them will be required. We have lots of time left before this deal actually gets the seal of approval.
Okay, understood. Thanks, sir.
So this will come through what? Through integration, getting into formulation from API and the cost control. That's how we'll be doing it. And the second is, how would be our capital allocation going forward? What kind of capex will be doing, any further acquisitions planned?
Okay. So one is, as you can see from this chart, 16% of Sassoon's business is currently formulations. We think that will be disproportionate in terms of percentages in the next couple of years. So growth is coming from formulations. Secondly, I have already indicated to you that Sashun's formulation business is more profitable than the Strides formulations business. So it's already making a lot more money, which effectively means that if you adjust for CRAMS, it's a good business. And we'll solve for CRAMS. It's only one small part of the large canvas that we need to fix. So it will mainly come from formulations. And I think for the combined, the biggest near-term gain will come in the uptick in the institutional business. Now, can we move that business from 50 million to 200 million in the next 3 years? I would like to believe so, because of the API integration.
And coming to capital allocation, I mean, any capex or any further acquisitions, how we should?
So I think what is very interesting is that Sashun, in spite of having a very difficult 2 or 3 years, have actually not shied away from committing all the capital that's required for growth, be it in new facilities, expanded capacities, or even the R&D spend. All of this has been completed. So I personally believe that the growth phase is over at Sashun. I mean, growth investment phase is over. All we now need is to execute on that well and try.
They have already started. All the investments have started sweating now. So those should bring good.
So no meaningful capex is what?
No. I don't see any large ticket capex being spent.
No further acquisitions also?
Well, I don't think we have the ability or the management bandwidth to do that. So we will not shy away from doing incremental strategies, but at this time our focus would be to have a standstill and get this done first before we look at it. But as we evolve our strategy and we spend more detailing around it, which we incidentally work with Boston Consulting, we will work out what are the gaps in our strategy, and then we'll see if it makes any compelling reason to look at assets. We look at it. The combined balance sheet has a less than 1.5 times EBITDA gear, which is easy. So we can take more debt if we want. There's all those things, but I think that's not the real challenge. The challenge for us is to ensure that we get some early quick wins, which we have identified, and that requires a little bit of focus and attention.
And sir, how about the US pipeline combined entity? Both of you have the US product pipeline.
So like I said, there's only one product which was overlapping, and we are a little ahead on that product, so Sashun has dropped that. There was only one product. So as you can see, there are 160 products together with only one product overlap.
So I mean, if I ask you what kind of launches we should foresee in next 3 years?
The only thing I can say is you should foresee product launches. Which products, I can't tell you. Yeah. All new filings, they have already partnered, as you can see, they have already partnered 13 products. I mean, sorry, out of this 13, one is a Strides product, which is vancomycin, as everybody knows, is partnered, which is going to be partnered for some more years. 12 of them are partnered from Sashun, and there will be no further partnering. Thank you. Any other questions before we sign off? Thank you all. Sorry, there's one. Yeah.
So what is the capacity utilization of Sashun's formulation?
Well, we have
system-wide?
significant capacity, and that's another big synergy point, and thanks for bringing it up. If I'm not mistaken, Sashun has a 5 billion tablet capacity in Pondicherry, and currently it has got about 70% occupancy, but some of them is contractual, as in it's not their own products. So we can easily move those products and take that capacity out. So actual products sold in the US under the Sashun or partner livery may be sub 50% of capacity.
This is system-wide?
Yeah. No. In Sashun. Yeah. Thank you.
Can you talk a bit on the terms of API as well as CRAMS business going forward?
Last year we have filed 9 drug master files, and we will continue to be having those accelerated phase of filings of DMFs. And you wanted some other information? CRAMS business in UK is focus approach with the new customers coming in. We see a lot of growth happening in the CRAMS business also. I learned from Arun that we don't give the future projections.
Thank you, sir. I mean,
No guidelines.
please try to understand. This is a very serious transaction that has happened in the industry, right? We need a lot more time before we extract all the synergies. All that we studied before we did this deal. It's not that we didn't do that. But is it the right forum and the right time to say? The answer is no, right? And as a philosophy and a company policy, we don't indicate products. That's for you to do, right? And you have many ways of finding that out, and you know, you can do that. But at this time, we are not ready to give you any kind of guidance, any kind of growth numbers. Historically, the company, especially Strides, has had a track record of significant growth above industry average. Will this combine deliver the same momentum? The answer is yes. We would not have done it otherwise. Okay? Right? Thank you all. Thank you very much. There's some tea and snacks. I can't see them, but I guess they will be served now. If you could just bear with us for a few minutes.